Welcome back. As we wrap up on Trading Hour, we leave you with an exclusive conversation. KV Kamath says he is certain that the RBI will see aspects of giving the banking license to corporate houses positively if the aspiring conglomerates address the regulator's worry on connected lending, which can be effectively handled by the use of technology. My colleague Nisha caught up with KV Kamath on the perspective of financial services sector and began by asking him about the expectation on the turn of the interest rate cycle. Thank you very much for watching this show.
Yeah, I would think there are two probably pointers we need to look at, whether in the global context there is a cutting exercise going on.
Yes.
If so, that accelerates our own ability to cut. And second, where is inflation heading?
Yes.
I think by and large inflation has been under control. Even the Reserve Bank has been saying that it is only certain elements,
yes,
particularly I think green items, which is causing some increase in food inflation. So if these two are in sync, then I'm sure we could see a lowering of interest rates towards the latter part of the calendar year.
Right. So that's the expectation. But in the last 2 years, our banking system has had a Goldilocks scenario. Our books were clean, provisioning was correct, NIMs were good, credit growth was good. But two important aspects where we didn't do well in the banking space is first the growth of the savings deposits, and also on the other hand the CASA. So is this a point of worry?
I think the challenges that you said, I think are systemic,
Yes.
sense that the shift in deposit growth to a lower trajectory, I think is something that will happen in any market when you have the capital market starting to show acceleration.
Yes.
And in India, the capital market is showing acceleration because the long-term saving
Yes.
mode is in a way has been kicked in. For example, through insurance, through pensions and so
Yes.
on. And in addition, newer products like
Yes.
InvITs and REITs,
Yes.
which can also tap the lay savers'
Yes.
money,
Yes.
are coming into the marketplace.
Yes.
And to add to that, the lay saver also now sees investing into equity type instruments
Right.
for a part of his deployment,
Yes.
a viable route. So all these will continue to, because this is a shift, systemic shift,
Yes.
driven by better understanding of the markets, technology that is available for you to deal with these products in a real-time basis.
Right.
So I would think that banks will have to learn to live with probably a lower deposit growth. I don't want to put a number than what they have been used to in the past. In the
Alright.
past, we used to say bank deposits will grow at least at 1.5 to 1.6 times the GDP growth, maybe 1.7 times.
Yes.
I think that may not be exactly so in the future.
All right. So this could be a new normal, is what you are hinting
It
at.
probably is a new normal. We'll see how it goes.
All right. And do you think, Mr. Kamath, that India needs another fresh new banking licenses?
Right thing that the regulator has done is allowed experimentation in terms of technology.
Yes.
So the sandbox approach that the regulator has taken to allow sandboxes to be run for various things. And those various things were actually developed by not the banks but by other adjunct institutions, whether it was the NPCI or we'll now see things developed by NBFC, the Digitech firms,
Yes.
and so on. So all these will then determine what's the nature of the institution which will thrive in the future, and which I'm sure the regulator will look at. I don't think it's going to be an issue of we want to just give another license, or we want to allow fintechs to come in, or we want to allow large houses to come in. That's not going to be the driver for this, at least from my perspective.
But given the growth prospects of India, is that a requirement, is what I was hinting at?
Yeah, given the growth prospects of India and the size of things, you need a much larger financial sector, including banks.
Yes.
Let me put that in context. If you go back 25 years and see, you go back even further in time, you go to 30 years.
Yes.
If you look at the rise of Japan post their growth,
Yes.
and we had by mid-80s, 90s, if you look at the 5 global largest banks,
Yes.
Japanese.
Yes.
In the 2000, 5 largest were Chinese.
Yes. Yes.
So logically in the 2020s, as we go towards the end of this decade,
Yes.
who should be the 5 largest banks? To me, the writing is very clear. Except I'll put it as who should be the 5 largest financial sector players.
Right.
Probably will be from India. There will be a few banks, but there will be other type of institutions also, depending on regulation and how the regulator wants to do. But without that,
Yeah.
the economy won't grow. All the other two that I said were transformational economies, and they had to leverage banks
Yes.
to do this. So I'm sure we'll have an interesting scenario in India.
All right. So our financial services sector has to expand.
Has to expand. That's for sure.
Given the growth that we have charted out. And to the argument on the large corporate houses having a banking license, do you think, which side of the argument are you on, Mr. Kamath? Do you think the rethink is required on this?
I look at it as there is no good or bad. The regulators' worry or concern should be addressed.
Yes.
Now, one worry that regulators have had is, will there be connected lending? If that is the worry, my belief is today there is enough technology to take care of that.
Yes.
You can put a constraint that there will be no lending at all.
Chinese walls, yeah.
No lending at all.
Yes.
So there could be various ways in which you could look at this. And I'm sure the regulator will look at it in the right context.
And in your view, fintech, I really generally segregate it in two pockets. One, the problem solving, giving digital, purpose solving software and services. The other one is the ones who are aspirational towards lending. What is the right success mantra for them to pivot into lending? Why haven't they managed to do that? There has been regulatory disruptions, but what could be done to go there?
You see, let me now step back a year back and then look at that sector. And clearly, what they have developed is world class in terms of technology and technology solutions. Digital is world class. Now, there was a voice, their voices were raised to allow them access to funding,
Yes.
to raise money, to become NBFCs, which could take deposits and so on, which weren't, in a way, those were not allowed.
Yes.
Now you see today what is happening.
Yeah.
Today there is an equally loud noise about the quality of assets.
Yes.
So if I am a banker, so who is right in this case? I think the regulator was absolutely right
Yes.
to say, let us understand. Regulator is not saying all of them have not done well, but he's saying let us watch and let us calibrate, and that is why the risk weight increase.
Yes.
The risk weight increase, if the asset then went and landed, with a bank, it's a double whammy. So there is a risk weight increase. So as I would say, caution and pulling you back from what you would have otherwise done. So without passing any overall comments on the quality of assets today, because I honestly don't know, what the regulatory action has shown me is caution.
Yes.
So till that caution and is in a way the concern is addressed to the satisfaction of the regulator,
Yes.
the regulator is not going to allow this.
Right.
So they'll say that we have the banks, we know how to, we have learned how to manage risk there properly, and they are probably doing a good job, so let us stay with that. So
Right.
I think the ball has certainly come to the court of the new players
Yes.
to convince the regulator that
Yes.
your concerns we can take care of. I think the ball is ball has to be handled properly.